Okay, so homework. Daily chart, gold. We finished here on April 4th, 2000 is pretty much where we finished. So you can watch this video and track and put all the supply and demand. And your homework is to do up until September 27, 2000. So April to September, this section of time. So mark these vertical lines on your charts and just figure out all the supply and demand in this section here.
Oh my God. Yeah, I'm looking forward to that.
So
Yeah, and
4th
then
of April 2000 to September. On the daily, yeah? Okay.
on the daily chart, this should be pretty straightforward to do.
Okay, so anything to the left, Kev, anything that's coming across, is that what you've covered today already?
Yeah, so everything to the left of these two lines we've already done. So I wanted to start it because of this tall price action. This was very tricky to read.
Okay.
So I wanted to create the supplies and the demands so that we'd have some history to base this technical analysis between these two vertical lines on for you guys.
Okay.
And then in the next session that we do, we're going to examine, the supply and demand in between these two, and then we'll look at your charts to see what you've done, and then we'll discuss why you drew it the way you did and what was your thinking, and then we'll work out, the proper way of doing the analysis in between here.
Okay, so the first thing I need to do is go back to, what's the date that you've taken this from, to the left?
September 99.
September 99, so I need to go from September 99 to April, up to 4th April 2000.
Yeah, April 4th, 2000.
Okay, so I'll do that section. And but to be clear, going forward, you can't just take a daily chart and start from the last high and low and go forward, can you? That's sort of, there's too much information you're missing. So say, for instance, you just went, okay, I'm going to see if there's any trades on whatever pair, and you go to and you look at this chart that you've got up and you think, right, that's my low there, that's my high there. Anything, I can basically zone that chart from top to bottom to the right. Do you know what I mean? But we're not doing any weeklies on there. We're not going, but we're just finding that last high and low. That's far too risky just to analyze that section of a chart, the last high and low, and work forward, isn't it?
I'm missing the point that you're trying to make. Sorry, Stephen.
Okay, so let's say, for instance, normally our thing at the minute is go right back to the beginning of time, chart all the zones on every time frame, and get ourselves up to the point of where we are today in time context of a monthly, weekly, and a daily. So, but what I'm saying is, what effectively you could go back to, say, this gold chart. Let's find a high and a low. If you go back even like further or whatever, go back a little bit further. Yeah, a bit further. Okay, so say we looked at this and thought, right, this bit here. Sorry, hang on one sec. This is our high, and this is the low. This is as low as we go. This is as high as you go. Everything to this side, nothing is higher or lower that we can see.
Right.
Can we analyze this all going forward and try to stay within these zones in terms of looking for trade signals, all that sort of stuff? Do you know what I mean? Bearing in mind that we would have to take into consideration weeklies, because they're going to be where the bigger force is going to be coming from, potentially to blow us off track. Do you know what I mean?
You could never, ever take a trade just by doing analysis on just one chart.
Right. Cool.
Never. If you try to do that, you will lose every penny in your account, guaranteed. I'd put my money on it 1,000 times.
Yeah. Cool.
Because you don't know the context of what's taking place, right? If somebody drives into town, okay, you're in town walking around and somebody drives into town, you don't know if they're going north, south, east, or west, because you don't know where they came from, right? So you can't. You couldn't possibly predict where somebody was going to drive through town if you had no idea where they came from or where they were going. And the only way you could know that is to know what the bigger picture is. You'd have to say to that person, "Hey, where'd you come from?" And they tell you, "Oh, I came from the south." And then you say, "Where are you going?" Or, "I'm going to the north." So as they're driving through town, you can predict that they're going to continue going north because you know where they came from. And if you're just looking at one time frame, your frame of perspective is so small that you have no clue. Yes, they just left from a daily demand zone, but are we reacting from a monthly supply zone? Because if price is dropping from a monthly supply zone, there's a massive, massive force pushing price down. And if it comes into a daily demand zone, it's likely going to be taken out. But if you didn't know that and you were just looking at the daily chart, you'd say, okay, price just dropped from a daily supply and it's coming into daily demand. Let me buy because it's going to go up. Well, it might move up a little bit, but you're going to end up being stopped out. Yeah. And so this is the thing with, when I took supply and demand trading with Online Trading Academy, this is all they did was they said, plot the zones. And they drew the zones differently, and they didn't even take into consideration institutional zones being removed. I mean, what they teach at that school gave me my foundation, but it's a complete disaster in terms of being correct with the analysis. And they didn't take into consideration the higher time frames and the forces coming into play because they don't even understand that stuff. But not speaking of them too much, well, the point I'm trying to make is that if you don't understand the context of the bigger picture, you're going to be destroyed.
Yeah.
And that's the thing, is that technical analysis doesn't typically take forces into play because they don't even understand forces. They don't even understand. If you can't find supply and demand on the daily chart, you can't find it on the weekly, you can't find it on the monthly. And if you don't know where the zones are in all these time frames, then you're not going to know what forces come into play. If you don't know what forces are going to come into play, you can't time the market. It's impossible because you don't know where price is going to go.
Well, I think that's a really important point, is that people watching and getting involved in the school have to understand that is the work you've got to put in. Because if you think I can have I can get on this daily, that's my high, that's my low, I can plot these zones, right, it's going to come off there, go down there, that you're going to get, it ain't going to be enough. You're going to have to put, I'm just saying that some people might be looking at it and thinking, oh, that might be enough that I've got to do. I can trade off of that. Do you know what I mean? But you're just saying now to do, for our point of view, for me and Kelly and others, is purely, this is just like it's like a module. Do you know what I mean? It's like, okay, we get to the daily chart. This is the last bit. Just, put some zones on there. It's practice, trend line zones. But bear in mind that it's, you've got to go back, you've got to go to the weekly, you've got to go to the monthly. You have to have the whole movie, as you say, rather than just catching the end bit. Do you know what I mean?
Yeah. Because, another thing is that, like, nobody should even be thinking about finding areas to buy or sell because you're just going to confuse yourself, number one. The only time you can ever know where to buy and sell is if you, first of all, you have a good grasp of how to draw the trend lines, and you can draw them correctly without making any mistakes. Yes, mistakes will happen once in a blue moon, but they can't be disastrous mistakes that happen so often that every trade you take is going to be a loser. So you have to be accurate with drawing your trend lines, and you have to be accurate with drawing your supply and demand. Once you're accurate with that, you can do them on all the time frames. Once you're capable of doing that, then we're going to do lessons on the forces of price and how price moves from these different forces, because there is a very there's a guideline that price moves along. It does the same thing over and over again, and when you discover this for yourself, you're going to be amazed to realize that there is a very specific structure and form that takes place on the charts, and that's why I've been able to have a good grasp of what it is that the institutions do, because they're doing the same thing over and over and over and over again. But if you can't figure out the puzzle, and which is the difficult part, if you can't figure out the puzzle, you don't stand a chance of trading. I mean, you can plot the supply and demand zones, and you can get lucky once in a while by taking trades off of the supply and demand zones, but it's not going to last. You won't be able to be consistent. And to be consistent in this business, you have to be able to take more trades that make money than trades that lose money. You know, most traders are looking for, you know, 40% winners and 60% losers, but they're taking bigger profits. You know,
And you know when you say structure, you know when you say the word structure, I mean, a lot of people would say, oh, structure is, you know, it's maybe like Elliott wave structures or whatever, but you're talking about structure in a completely different way, aren't you?
I'm talking about how the institutions come into the markets, how they buy something at a low price, how they push price up, and then how price exhausts itself and then reverses down into a demand zone where they fill in the rest of their orders, and then they push price up again. You know, every time price exhausts itself, it's always exhausting itself at an opposing area. It just doesn't exhaust it unless it's going into new territory, all-time highs. It'll exhaust itself when price has no more buying. But in terms of price moving into areas that have historical trading that has happened before, price always exhausts itself at key areas, and it's typically supply and demand zones. Okay.
So do you think when you look at it, when you look at a chart, that an institution is going, right, okay, I mean, when I look at it, I think it very much moves in like quarterly moves. If, you know, they look at the year and it's like in 3-month chunks, do you know what I mean? You can sort of go, you can see they're plotting to take it from one place to another over the course of a year. That's what it sort of looks like. Do you know what I mean?
Yes. Yeah, it kind of works like that. They have long-term plans. Like when you looked at gold, right? In 2017, there was a rally that took a year to accomplish. But that's when you take a look at the monthly chart. When you look at the lower time frames, there's a certain structure that has to take place to help facilitate that move, right? On the monthly chart, they say, okay, in 2017, we're going to move price from down here to up here. Like for instance, let me show you. Monthly chart. 2017, right here. Okay, price is here. And in 2017, their goal is to take price from down here, 1120, to up here, the 1350s, okay? But for it to get from here to here, it has to do certain things on the lower time frames, right?
Yeah.
Just like if you were taking a trip, a car trip from Toronto to Florida, if you look on a map and you look at the highway, it pretty much just looks like that, right? But if you zoom in on that map, there's going to be other stops that you have to take. You know, you're going to have to get off the highway, get gas, come back onto the highway, continue onto the highway. You know, there's structure that takes place that forms this bigger highway, right? It's not just a straight line.
Yeah.
It curves around mountains, it goes down valleys, it goes around cities and stuff, and then eventually gets to its target. The charts are the same way, okay? And what I'm saying is that depending on what obstacles you have, a mountain, a city, valleys, a lake, you know, depending on what obstacles you come across, price is going to react very predictably. What? Can I say that word or I can't say that word?
Make it up.
In a very predictable fashion to those obstacles. So what I'm saying is that when you do this long enough, you'll come to realize, hey, price every time it comes to a lake, it does this. There's a bridge. Every time it comes to a train track, there's a bridge that goes over it. Every time it comes to a lake, if the lake is this big, there's a bridge. If the lake is that big, you have to go around it. You know what I'm saying?
Yeah.
Just like there's structure in the real world, when you face obstacles and it becomes predictable on how to deal with it. Hey, there's a red light. You have to stop until it turns green, then you go. Oh, look, there's another red light. What do? You do the same thing that happened last time. Whenever you come across the same scenarios in life, you've come across them so many times that you know how to handle it. The same thing is with the market. The market has obstacles that present itself from the journey, from going from one place to the next place. The only difference with the market and real life is that in real life, you can see the obstacle and you can see how to go through the obstacle. You know, you come across a river and you see the bridge is there. In the market, when you come across the obstacle, you have to know and anticipate what is going to happen because of all of your experiences looking at the charts.
Yeah.
Okay, so now when I'm coming across that river, I already know that there's going to be a bridge with like 95% accuracy, if not higher. And the reason being is because I've come across 1,000 rivers, and every single time I've come across 1,000 river in these same scenarios, there's always a bridge. So when you start to see the same thing happen consistently over and over and over and over again, you start to realize that there's a certain structure that exists. And price is moving very in a predictable fashion with these obstacles that you come across. So that is, you know, you don't know if there's a river unless you can spot the river. You know what I mean? Most people can't spot the river, so they walk into the river and they drown. We are spotting the rivers, we're plotting it, and then we know how to deal with it when we get to that river. That's the difference between regular technical analysis that doesn't take any of these obstacles into consideration and what it is that we do here. Is that a good analogy?
Yeah.
And that's why we got to get the base, the foundation has got to be solid.
Exactly.
You get
The
trend
foundation's
lines
got to
wrong.
be solid.
If the trend lines are wrong, the zones are wrong. You're looking at a book which has got it's got a different story in it than what's actually happening.
That's
Do you
right.
know what I mean?
That's right. And that's why it's so important. And that's why I created the observation journal, because the observation journal, I'm plotting the rivers, the bridges, the obstacles, everything for you in the observation journal. And I'm doing it and keeping track of it myself. I'm doing it on my charts, and then drawing it here in the observation journal is a nice physical representation of all these obstacles. So I'm drawing all the obstacles for you. You're supposed to be doing it on your chart, you know, as much as you can with the knowledge that you're gaining. And then when you need to double check your work, you come to the observation journal and you look. Has there been any new obstacles created? Has there been any new supply zones, trend lines? Do I have to adjust the trend line? And so when you track all the obstacles, all the trend lines, all the zones and so forth, the whole purpose is you're tracking the story. You're creating a picture of what's taking place on all those time frames, so that when the market conditions are right, we could take advantage of it and be correct a lot more times, being correct than the times that we're not.
So what would you say are like the essentials for where we are at the moment to be checking the website for? So for instance, is it worth us looking at the Arujo report, or leave that for the time being? You know, is there certain things on the website, as well as doing our chart work and posting it, is there other things that we should, for where we are at the moment, is there other things that we should definitely check and other things that we just leave for a little bit further down the road when things come together a bit more? Do you know what I mean?
Yeah, so that depends on the type of student you are. So we have a lot of people who are money managers. We have people that, you know, run their own services and sell trading signals themselves that are members, and, you know, that's fine if they want to do that. It depends on what you're here for. If you're here and you have a trading strategy that you feel very comfortable with, and you're just looking to time your entries, then you want to read the Arujo report, because the Arujo report is basically detailing what the positions of the institutions are, okay, and where they're accumulating position, and that plays into what's taking place on the supply and demand on the charts, because we're incorporating two things here: what's taking place on the charts and what the positions are with the institutions, so we can predict what price is going to do when we come across those very few circumstances on the charts where we cannot predict. Because remember, in one of the video lessons that I did in one of the webinars, the price is predictable like 80% of the times, but there's 20% of the times where it's not predictable. And the reason being is because they are creating the zones live. Okay, they're creating a demand zone, and price is exhausting itself, and we don't know where they're going to exhaust itself. Okay, it could exhaust itself anywhere before it retraces, so we don't know when that's going to happen. We'd have to know the real live orders for us to know that, and so we don't have access to real live orders. But what we do have is the COT report, and we get the orders from 3, 4, 5 days ago. And if you can be able to plot their positions on a template that shows you the extremes of their moves, then once you examine enough data, you can predict when they're exhausting their longs, when they're exhausting their shorts, and be able to have the ability to predict when the exhaustion is going to take place and when profit taking is going to take place. So if you're a trader with your own strategy and you're doing well, you just need help with your entries, then you don't have to worry. And a lot of the students are like that.
No, I mean, for someone like us, for us, we're
for
I mean,
you,
I don't know about Kelly.
you don't
I'm
have to look at
starting.
it.
Yeah. I'm
You don't have to
basically
look at
looking to. I'm learning this way of doing it because I've learned other ways that I've put in the bin. Shall we say? Do you know what I mean? And
Yeah,
this
what
is
you
like,
should be.
okay. So I just want to think, right? What is there? Apart from zones and trend lines, is it just literally that's all we should be doing for the next? Get them right, and then it will slowly build up into, COP report data, force of price, and all that sort of stuff later,
What I would
further
be
down the line.
doing, what I would be doing if I were you is, one, I would be tracking the latest supply and demand zones on all the currency pairs that we trade, the ones that are in the observation journals. Okay, if you don't have that much time on your hand and it's too much of it takes up too much of your day to do that, then don't worry about it. What you should be working on is this homework that I'm giving to you, plotting the zones and the trend lines, going through the video lessons, working on your journal, and writing everything from the video lessons into your journal with the drawings, so that when you're doing the analysis yourself, you can apply your notes from your own journal onto the charts. Just focus on that. Focus on the video lessons, the classroom sessions. Watch them over and over again. I mean, the more you watch it, the more it's going to get ingrained into your brain. And take notes and draw, and that's what I'd be focusing on.
Yeah.
That's the most important thing. Is that
perfect?
Okay. So we've gone 2 hours. Look at that.